Hey guys, Mike here. And so, interesting day in the market. Another green day for everybody. The Dow, I think, is up 12 days in a row, if I'm not mistaken. The SPY set a new 52-week high. And so we just keep roaring along here. And, I got a couple of headlines which were actually good news. But then one subject I'm going to talk about, which I think one of our members brought something like this up. And I don't think it's getting enough talking about, right? So it'll be a decision that's coming up Thursday. It's not even on our calendar and stuff because it's not happening in our country. But I think it absolutely is going to affect our monetary policy. And I'll show you what I'm talking about when I say monetary policy is like number one at the top of the list if you own stocks or any kind of investments. Okay, that's just the way it is. And I'm going to show all of that to you as a matter of fact. And of course, with the Fed meeting tomorrow, what is that? That's monetary policy, right? If we raise rates again and stuff. And then I'm going to show you something about Tesla, which you may or may not be aware of. We got to see if it plays out because I'm going to show you the chart. You know me, I deep dive into it for you. And we'll see what you think about that. Now, good news is this. Then we all saw this coming yesterday. UPS and the Teamsters reached tentative deal to avert strike, which would cost UPS billions probably, right? And so a lot of you guys said that. And, the International Brotherhood of Teamsters reached a tentative new 5-year collective bargaining agreement covering more than 300,000 delivery and warehouse workers. So hopefully we can take that one off the cuff because that would have been a hot mess. Another one here, you might notice PACW there, regional bank, is absolutely getting slaughtered. Down 27%, starting around 1:30 today. And it came out that, they'll probably no longer exist because Pac West Bank Corp., which has been selling assets to shore up its balance sheet, is in talks to be sold to Bank of California. And so it's kind of funny, right? Most companies that when they go to get bought out, their stock actually jumps. And then this one just actually nosedives, right? So, congratulations to anybody who's got puts or been shorting that one and everything. Now, of course, what else is going to affect regional banks? You might have noticed all of them are red. Well, what's happening tomorrow, right? The Fed's meeting, and there's right now a 99% chance they're going to do another rate hike. Who is that going to affect the most? It's going to be regional banks, okay? And so, that's going to be something to watch out for, see how they react to this, because, they have been running up, which is kind of funny. And then when you look out at September, remember August, we're going to skip an official meeting. They'll have Jackson Hole, but it won't be a rate hike meeting. And they're saying 82% chance that it is going to be a pause. That's it. And only a 19% chance they'll do another rate hike in September. So we have to keep an eye on that, how this changed tomorrow and everything. Because, the Fed president, Jerome Powell, he'll come out there and who knows if he tries to be hawkish or not. We'll see. I don't think it's in him to even be that way. But then, of course, it never fails. I always love looking at these that, you get the implied rate. Like, where is it going, right? You see the actual rate coming up. The dotted line is going to be the forecast. And so they say, well, they'll raise rates tomorrow. But then after that, it's going to start rolling off, right? They're going to start cutting rates even before this year ends, just out of the goodness of their heart, I guess. And I always wonder if the market's even looking at that. So I'm like, really? You guys have been wrong this whole time you've been saying that. But again, we'll see what they're going to do and stuff. Again, inflation is coming down. Are they worried about it rearing its head again? Absolutely. I think a lot of prices will start to pop back up, of course. We'll see if that happens. It's never just like came down like it is right now and never kind of gave a second push up at all. But more important, I think, is they're just trying to get the labor market under control. These companies know, especially like smaller companies or fast food restaurant service companies especially, trying to keep the rates where they're at, what they're paying people and everything, is almost unsustainable because the prices they have everything at right now, for the long term, is just unsustainable. There's just no way that can happen because don't forget, inflation was up here, so the prices are up here now, and they're just getting added on even more. So when you keep saying, I see in the comments all the time, right? Man, everything's just still so expensive. Yeah, it's going to maintain that way for a long time. The only way that stuff comes down is a recession, right? Remember I said almost a year ago, and I kept saying, I said, there's going to come a time where these companies are, they're going to forget inflation. Inflation's going to be coming down. The companies are still going to be raising prices, and that's exactly what's happened. You're still hearing this on earning calls. They're raising prices. They continue to raise prices. They'll continue to do it over what the percentage of inflation is. So they're going to continue to do that. But also one reason they keep doing it, and the excuse is because of the labor they're having to pay, right? Still got a labor shortage. Still help wanted signs out there. It's still out there, especially in the service industry. Again, when you got teenagers making, even in my area, I don't know how you guys survive in California, New York, all those expensive cities. But, even in my area, we're paying teenagers, anywhere from 13 to 14, 15 bucks an hour to flip a burger. I did that at 16. I'm not trying to insult anybody, but let's be real. Don't take a lot of skill to go scoop and flip. I was taught it at 16, not the smartest, sharpest tool in the shed or whatever. And I learned it and I was pretty good at it. Okay. So, I mean, when you're doing that and knowing like 3 years ago, that same person was making $8 or lower, that's a big jump, right? It's a big jump. You can only charge so much for hamburgers and so much for fries and all this stuff. So, just keep that in mind. Now, that leads us to monetary policy. And I got a bunch of different things on this, right? It's very important because not only in this country, I'm talking about other countries that will affect our monetary policy. Okay. So keep that in mind. It's the number one thing that drives. Before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And now remember, there are rules and policies that have been in place every time something happens. And guess what the Fed does? They break them. And guess what we do as people? Go for it, baby. Go for it. Remember, every single crisis is something different. They never bailed out banks like that before in 08. They never bought car companies. The Fed didn't do that. The government actually stepped in and did that one. But our Fed and government steps in and does something new every time. What did they do in 2020? All of a sudden, they started buying like corporate debt. And you're like, what? What are you talking about? Didn't matter. Start sending out checks to everybody. It's like, and we cheered on. Woo! That's all we say. You want to know what your country is really all about? Look at what happens in a crisis. See how we fold like pump tents and we bow down and go, yes, because this will never come back to haunt us ever, right? One day it will. Oh, yes, it will. And they know how much power they have over us in a crisis, and we will allow it to happen. That's just the way it is. And again, it's all good for my stocks and my portfolio, but one day it's not going to be good. Mark my words and mark this date. I said that, okay? Now, this is why you see there's two different things happening. What's going on in China right now? I mentioned yesterday the president over there came out and said what he said. And I was like, what does that mean? And then, here's the interview, like a 20-second clip right here, telling you exactly what they're doing for the first time ever.
This is the first time ever that they're going to do their recovery. Their stimulus is all going to be consumption-based versus infrastructure-based. Remember, they built those empty cities, the bridges, the whole thing. It's all going into consumption.
Again, if you know what that means, let me know. I don't know how they plan on doing that. They're just saying they're going to be really aggressive on changing monetary policy. Maybe that means they're not going to be attacking the companies anymore, trying to bring them down or whatever. Maybe they're going to be stimulus checks. I'm not sure what they're doing to bring it back. It seems like they're just trying to let people be a little more free and actually work and do their thing. Maybe that's weird. It's foreign to us, right? We're kind of like, what? But again, I don't understand how their government works. It doesn't compute with my brain, and some of the stuff they do, it just baffles me. I know it's all about power and keeping people under control, I guess. But again, I don't live there. And so, and I personally, yes, I am biased as far as like, if I don't trust something, I'm not going to put a long-term investment in it. Don't mean I won't trade the heck out of it though, right? But I live in America. There's plenty of companies here I can put money in that I can actually see, I trust, I know how our government operates, and I feel better about it. It's just different. But now if I lived in a country where that wasn't the case, well, then of course, maybe I give it, a more look-see or whatever. But again, I'll trade the heck out of it. But no, I'm not going to buy Alibaba or any of them for the long term. A lot of people do, and that's great. I'm not putting any judgment on anybody. I'm just saying that's where I'm coming from, right? If I lived in Zimbabwe or some other place or something, didn't have some huge stock market and a bunch of companies to invest in, I'd probably think, long and hard about that. But I have many choices right here, right? Doesn't make any sense to me. Now, here's something one of our members brought up, and I saw an interview about this Friday. I've been hearing things about it, but I know really not that much about it. So what I got to do? Got to educate myself. Got to at least make you aware of it. Maybe a big deal, maybe a nothing burger. Who knows? We're going to find out, though, very soon this week. All right. And so somebody asked me, hey, I heard about Japan, maybe making a decision and something to do with their monetary policy. So I looked it up. And, of course, I put down there, I said, well, from an article I read, Japan's interest rates have stayed low while central banks elsewhere are raising rates to regain inflation control. As a result, its currency is falling like a stone. It's down 20% against the dollar, which is not good. And that's only like in a year and a half. Meanwhile, to keep long-term interest rates at close to zero at a time of rising world interest rates, the BOJ has had, just the Bank of Japan, has had to intervene heavily in the Japanese government bond market. That in turn has seen the BOJ's balance sheet swell to approximately 130% of Japan's GDP. There are now clear signs that Japan's ultra-easy monetary policy is producing higher inflation. Japan's headline consumer prices rose by 3.3% in June, exceeding the corresponding U.S. figure for the first time in 8 years. Meanwhile, stripping out volatile food and energy prices, Japan registered a 4.2% inflation rate. And now, of course, U.S. rates are actually positive, while Japan's interest rates are negative to the tune of 2 to 3%. And it may not be now, but obviously people are seeing the writing on the wall where Japan is probably going to be forced to abandon its yield control experiment. No longer will U.S. and world financial markets be buoyed by the flood of BOJ liquidity to which they have become accustomed. And we're going to find out about this decision on Thursday. And do you want to know why this is so important? And you need to be aware of it, because I didn't even know this, because I don't really care about, I care about the debt, but there's nothing I can do to control that. And I got many other things in my life I need to be focused on. But if I ask you who is the #1 country outside our borders, obviously, that has the largest percentage of our debt, I would have said China. I'm going to raise my hand. China, because they're huge, obviously, and the second largest economy in the world and all this stuff. I would have been dead wrong, okay? It's not even close. It's Japan. Japan right here, according as of January 2023, and even in April, I read a source in April said this too, 1.1 trillion with a T dollars of our debt. So this is to the right there, you see share of foreign-owned U.S. debt. And so they buy our treasuries like hotcakes. Guess what happens if they start tightening monetary policy and all of a sudden they're not buying our debt like hotcakes? Somebody has to step in. Who's that going to be? China? The other thing you don't want to see them doing is selling the treasuries, right? Start flooding the market with them, okay? Because we're trying to sell them at the same time, right? That gives you more competition, keeping it very simplified. But that's my understanding of it. And so just keep that out there, okay? Now, again, what will happen? This is where the Fed will probably just step right in and say, you know, are we going to continue to roll the balance sheet off or just start buying back? Because somebody's got to buy it, right? Our Congress up there, what do they do? What's the #1? What's the best thing they're good at? Running up the debt. That's their #1. Both sides of the aisle just run it up. They just spend it on different stuff. But they run it up. That's what they're good at. It's the only thing they're good at. Okay, so if that's the case, there's going to be a decision to be made, which means it'll affect our monetary policy, because the Fed's going to figure something out if your #1 buyer is not going to be the #1 buyer anymore, right? So just keep that in mind as well. And plus, more importantly, see how the market digests it if they do it. Now, in June, they kept rates the same, right? So Thursday, we'll know, I think it's 7 a.m. our time, maybe, Eastern time, that is, what they're going to do. So we'll see what happens with that. Now, earnings obviously rolling out, Microsoft, Google, reported, stuff like that. But if you look here on a global scale, this week alone, there's almost $27 trillion worth of U.S., Europe, and Asian firms reporting, as you can see right there. So this is an enormous week for earnings. And something that's happening, which you ain't seen in a while here, is all of a sudden stocks are running way ahead of forecast. If you look at this chart, normally the forecast a lot of times is way above where the S&P actually is. But not this time, man. They are way above, and maybe this is why you're seeing analysts try to raise those price targets for year-end, because look at that. That's a big gap. And you go back to 2018 and come forward, when you see big gaps, it's not the stocks are above the analysts, it's the analysts above the stocks. And so, you know, that's interesting to see. We'll see how it plays out. I usually don't think that's a good thing. But, you know, you look at the SPY today, what happened? New 52-week high, and it's only 5% off the all-time high. I mean, it's still mind-boggling to look at that, to think about that with what's going on with our monetary policy right here at home and around the globe, of course. And now this leads me into Tesla, and I got a couple of things to show you on this, okay? So I want to make you aware of this. Might not play out, but just be very aware of this. And so if you look at Tesla right here, you can see kind of flattish, greenish day. We're kind of all over the place on Tesla today. But again, it broke back below the 268. You know, bears were able to push it back down beneath that. And so it's kind of all over. And I'm telling you, anytime you usually see this, I gotta start tracking this better. But when I see, like, yesterday it was call sweeps, right? Today it was put sweeps, okay? And it was red or flat. That's usually what happens. They're pushing down. You look at the dates on these, they're very short term, 7/28, 8/21, 8/4, 8/11, and, you know, anywhere from 275, 280. And what I want to see, more importantly, though, is how the seasonality in Tesla plays out. And you may kind of, you know, say, oh, well, that don't mean anything. But actually, if you know me well, you know I actually go back in the real charts, right? And I want you to look at the pattern right there on that chart from August into November. And what you'll see here is, if you look, I'm going to go back all the way back to like 2014. And you look right here, last year, that's exactly what you saw, right? Look at that pattern from August all the way going over to October. You go back here, again, 2021. You see basically the same pattern, Okay, it's either going to be flat, going down, all that good stuff, right? You go back over here, you go in 2020, this one got a big pop in August, and then of course what happened? End of August, September, October, it just sells down, goes sideways, right? So again, 2020 is somewhat of an anomaly, but you're still looking to see that, okay? Then you got 2019, look at that one. From August going all the way into October. Not good, especially August, September, which is what I'm really paying attention to, right? Then you go to 2018. You had that pop in August, looks just like that chart, and then what happened? Boom, right there, middle of August, sells down all the way through September, goes sideways. 2017 looks pretty much the same, right? Pop in August. And the reason why, if you notice, earnings was falling at the end of July, early August in these years, right? Then you go back to 2016 here. I mean, you see what's going on, sideways and down, right? And so I just want you to be aware of that. Again, I know every year is different. When you look at that, though, and you go, that was pretty much almost every year going back, right? So, just keep that in mind. You can get that pop and then just kind of trade sideways or goes down. And so I want you to be aware of that, because that's what I feel like my duty is to you guys, is to make you aware of stuff, okay? So earnings, of course, tomorrow you're looking at AT&T, Boeing, Coca-Cola, Tilray, Hilton, ADP. After that, the big one's going to be Meta. Let me know in the comments what you think about that one. Chipotle is going to be a big one. We'll find a lot about consumers because they've been raising prices like crazy over the last year, and we've been paying that mess. So let me know. And they own a lot of different restaurants. So let me know what you think about that one. But I really want to hear about that one. And then, of course, the only thing going on tomorrow economically is the Fed. At 2 o'clock, they'll make their decision. And then at 2:30, old Jerome is going to speak. We all know, as I like to record the 1-minute chart, the market's going to go all over the place. And so we'll have to see what happens. Again, I'll keep you guys updated on what happens with the Bank of Japan, how that's going to react, how the market's going to react. And I want to make you aware of that because it ain't on our economic calendar. So, you might see the market tank, or say they raise rates and it tank, and you're sitting there going, what just happened? Do we have some economic data out there, Jimmy? Nope. And it's like, it's what happened over there because this is a global economy and they know that's our, gravy train from them, right? So, and they know it'll affect our monetary policy and stuff. So, and maybe they'll, it's funny that maybe the market would be happy if they did it, right? Because that means the Fed would have to do what? Stop tightening. They'd have to start running a balance sheet and start buying bonds again, right? And then what becomes the only game in town? Stocks. And so maybe it's weird like that, but you never know. I mean, you see how the market reacts to bad news. So, just putting it out there to you. So hope you guys got something out of it, guys. Hit that like and subscribe button. I really appreciate all you guys, and I'll see you tomorrow.